Hello, this is Richard C. Wilson with the Family Office Club. We're doing an investor mandate interview today with Peter. Welcome, Peter.
Welcome. Thank you. Appreciate your time.
Sure. And if you want to introduce yourself, the
Sure.
name of your investment organization or the type of investor you are, and just a little bit of your background, that'd be great.
Sure. Peter, I am co-founder of M Family Office. We like to invest in other um, owner-operators of income-producing real estate. We keep it simple. Mostly we focus on value-add multifamily senior living facilities that are private pay, and we do look at some self-storage opportunities that can be increased in size, and so that's our main focus. And we also team up with other family offices that piggyback with us, and we do some deals together.
Great. I know you're based in Florida. Is it Tampa or Fort Myers? I forget which one of the two.
We're based in Tampa,
Okay.
be more specific, St. Pete area.
Okay, great. Yeah, and I appreciate you coming to some of our events and speaking on stage at a few of our Family
Sure.
Office Club summits in the past. And when you talk about self-storage and multifamily and a little bit of private pay senior living, what's your geographical preferences or size preferences on those types of investments?
Sure. We take a different approach. We approach with teaming up with owner operators, and that will decide on what areas and locations that we invest with. But the main thing is we're dealing with an owner operator that's been through multiple cycles, like the one that's going on right now. How they handle a down cycle, that's very important to us. But in addition to that, we will invest in the markets that they've been doing their investments in for the last 10, 15, 20 years. And why that's critical is because there's a lot of submarkets, and especially in the bigger cities, and there are some areas that are not so good, and then there's a lot of areas that might have some gentrification going on, and that's very critical because they know those locations. So in addition to that, they're fully transparent, and what we mean by that is when we do our due diligence, they will open up other deals that they have done so we could see from beginning to end how they performed and what were the challenges along the way. We know there's a pro forma in every deal, and things don't go exactly the way they should, and there's usually a few struggles along the way, so we looked and see how they handled those struggles. So in addition to that, the other transparency part is going to be, as we do business together, is getting us, whether it's weekly or monthly reports, that's going to give us performance. And we have certain parameters, and we know they have parameters that they watch internally, and we want to look at theirs as well as ours. So another point is they need to be a group that's very familiar with the tax laws. And the tax laws are a big deal because they increase the returns considerably. And the big ones, of course, are the cost segregation, the Section 179D. That's something that most owner-operators do not take advantage of. And then there's something called bonus depreciation. And then the $1,500 de minimis rule that's mostly repairs, which give you an opportunity to write everything off and not recapture. So those are the key things when it comes to partnering up with the right group, and of course we want to be in an area where demographics is always going up.
Sure.
And so we follow the people. You follow the money, and we follow the people. That I think that's very critical.
Right, great. Well, I know that you're registered as an investor with us on privateequity.com, and I remember being on a few phone calls with you where you're obviously relatively strong on the numbers side of thing and digging into the financial models, but it also seems like asking for weekly or monthly reports from a multifamily independent sponsor. I've never heard of someone asking for weekly reports after they've invested. I know some like a monthly or quarterly report. So that seems to be something that you guys have learned to ask for, probably for several reasons. How much pushback or how much of a problem is it? I would guess that between looking for good returns, a solid team with a long track record that knows the tax code, that'll be transparent, open up past deals, do that weekly, monthly reporting, you actually like them as human beings when you meet with them. I'm guessing that
Sure,
knocks out,
absolutely.
what I just said probably knocks out 98% of people who approach you, I'm guessing, right?
It does. It becomes more of a challenge on our end to find those people. So we have to get out there and meet them and spend the time. But to answer your question, when it comes to those weekly reports, even monthly reports is very time consuming for these owner operators. We understand that. But we know they have internal numbers they look at weekly.
Right.
If they don't, that's a red flag to us saying, wait a second, all we need to know is how are you doing internally? We have a library of statistics and data with our past investments, and we have exact criteria that other groups are doing, so that gives us a nice base to say, okay, are they doing what we feel is most important? And not only that, we also have a group of other family offices and high net worth investors that count on our experience and our numbers, and then we could share that with them.
Right. Makes sense. Okay. And if there was one thing that is the number one type of investment opportunity that you'd like to see above everything else, what would that be? And I know I'm asking you this during the height of the virus crisis. So that's a very hard question. You could be looking at absolutely nothing right now. But, I guess however you want to answer that to be most helpful to you, short and medium term here.
Well, no, I appreciate that. And let's deal with what's going on right now, because we've been at a couple of your functions, and I've met with a lot of other family offices, and we've had a lot of conversations about when is this bubble going to pop, or when is the market going to go downturn. And everybody has their own opinions and their professional advice, but I would say about 98% of guys and ladies that I've sat with all agree that's coming soon. We have a terrible tragedy that accelerated that bubble. Okay, that's uncontrollable, obviously, with the COVID-19, and so it's changed probably everybody's perspective on what they're going to invest with today. When this is an opportunity, not only we are in a recession within 16 days when this occurred, but now we're looking at a potential depression. Statistically, that may come to reality, and you see this little bit of a bounce back right now in the last 7-10 days of 30% bounce back in the stock market. So it could be very scary. It could be fold. So you have to be very careful. But for us right now, when this occurs, we will look to potentially, because this is a potentially once-in-a-lifetime opportunity in our field, is saying, hey, if this is a depression, we know it's going to be a recession, is there an opportunity to take a look at things that you could short? This is outside of our regular investment mandate. With the real estate, we know we have to wait for the real estate, but there may be some opportunities just on the basis of, okay, we know that the Fed has to double or maybe triple their balance sheet. They went from $3.8 trillion. Now they did a stimulus plan that's $2 trillion everybody knows about, but there's other stimulus plans they pumped into the monetary system that's now about additional $3-4 trillion that's added to their balance sheet. So we're going to pay for that. And so we're looking for potential experienced people to say, hey, listen, you know what, this is what we're doing in a period of time of going short, and we have our ideas. I mean, we're looking to potentially look at credit default swaps. I think that was something that we know a few people that have used. We don't know how to trade them, so it's not something that we're experienced in. We're in the real estate side. Or potentially a lot of people are grabbing gold. I'm talking about the real gold, not shares or equity, but the real gold. So, and then of course, all the corporations that were buying back their equities, they don't have any money anymore. It's gone. So that's dried up. And they were the biggest buyers of equities for the last 7-8 years, maybe even longer. So there's a lot more to happen. So to answer your question is we will go out and continue to build our relationships for the real estate side. And we're going to see how people respond and what they do during the down market. And we're going to be with them for the next year or 2 years, however long this pans out. And we're going to team up with the ones that do well, and we're going to ride it with them to pick up some properties. On the way down, if there's some groups that we feel comfortable that really know how to do these potential short positions, we will consider them.
Right. Okay. Great. Thank you.
Okay.
And what would be your number one piece of advice? You speak to a lot of investors within your own network, within Family Office Club. If you could give a $100,000 piece of advice that would just save people a lot of time or burnt money or avoiding a bad deal or getting into the best deals possible. You've already kind of given that advice, just saying what you do in such a detailed manner, I think gave some value to our listeners, but what would be your number one piece of advice?
Well, you know what? I probably got more than one.
Sure.
It won't be too long-winded, but don't be fooled with the recent rebounding. Don't be fooled by the noise on the media. Educate yourself. And what I mean by educate yourself is find the leaders in the industry that have done successful for 20, 30 years and listen to their podcast or listen to their YouTube, such as Ray Dalio, Raoul Powell, Jim Rickards, Daniel Amerman, Richard, the things that you put together and the people you're going with. Listen to these people who have been through these downturns. And you know what? You got to turn the noise off, listen to it, educate yourself, and talk to yourself and talk to your team and come up with your own analysis with this stuff versus being influenced by so many other people. Listen to the education. Most people don't know there's an oil crisis going on. The biggest oil crisis in history. The biggest in history. Not talked about. It's a very serious problem. It's our dollar is going way through the roof because of the oil crisis. You know, as you know, the dollar is the world nomination of trade in oil, and Russia is no longer on that denomination of U.S. dollar. So things are changing. It dropped below $20. Right. Who would ever expect that? So knowing these things and staying focused into your goals. For us, we know we're very good at finding good owners and operators that have made money in income-producing real estate. We're going to stick to that game plan. Right. And we're going to be, this is a time during a recession time in the next, whether it's 6 months, a year, 2 years, 3 years, we're going to build a team, we're going to build those relationships, and we're going to be patient. And we're not going to jump into the next big thing, you know, whatever that might be. There's going to be a lot of exciting things, a lot of noise out there, and then that would be the advice I would give.
Right. Yeah, that's great. I think the favorite thing I took out of all that, and it's one of the best pieces of advice I've gotten in these first 30 interviews, is I think forget the media journalists who are paid $70,000 to $120,000 a year to regurgitate lines that show up on their prompter screen and were written by who knows who. Based on statistics that we're talking about, focus on people that have built enormous businesses over many, many cycles, or who have frontline information, first information, better quality information, and not a political or company bias to really, you know, slam the fear button every minute, and to just make a candid business, you know, acumen type decision of like, this is how we're cutting through the clutter. This is where we're placing our bets. And I keep on coming back personally to, you know what, 5 to 8% of companies are killing it right now, and they're doing amazingly well. You know, how do we pivot to doing interviews like this with you right here to make things more digital, or support companies like a health-related company I invested in last year that's up 25, 30% in revenue. And so I think what you're saying is right in line with that. Is you got to really be careful of, you know, what you let stream into your brain nonstop. You know, in terms of information and news updates, et cetera, and realize what that does to your thinking, basically.
Sure. No question about that. And keep in mind that I think it was Mark Twain, but I heard it from Howard Marks. He mentioned that, you know, history may not repeat, but it rhymes. And that's a key. And you have to interpret that way, but stick to your investor mandate. Stick to what you're really good at, and watch it carefully.
Yeah, for sure. Great, appreciate that. So, Peter, what's the best way for someone to reach out to you? Is it LinkedIn, email? What do you prefer?
You know what? LinkedIn's a good way. Email is fantastic. It's those are probably the two best ways, by email and LinkedIn. I don't mind you calling me as well, especially if you got some value that's pertaining to what I mentioned. And my phone number. And for any reason I don't answer, it's my direct line. Just leave exactly what you're calling about, and that gives me a good way to prioritize my return calls.
Cool. Yeah, sounds great. And then once you know, we're doing virtual investor discussion panels each week. We got our third one coming up this week, and I think we already have you booked on one, but thanks in advance for that, if I'm correct. And then once our live events start up, you know, I'd love to have you back at one of those again, of course, as well.
No, I appreciate it, Richard. Stick with it. I think as you reach out to people during these next 6 months to a year, it's going to be probably the most valuable information that anybody can learn and listen to, because these are times that the strong will survive, and
Yep.
and you continue to reach out to these people, you're going to see the difference. And so I look forward to listening to you and being at the next seminars, so I could see who's making it and who's not.
Yeah, for sure. Yeah, I appreciate all the thoughts today. Thank you for having such a high context interview here in a short amount of time, and I'll definitely be keeping in touch here the next week or two.
No problem, Richard. You take care.
Take care.
Stay safe.
You too. Bye.
All right. Bye-bye. Yeah, bye.